While we stand right now is more important for a trader. There are three things now I should to look at. One, can we fall more? B, are we in for a V-shaped rally? Or we are likely to just bottom out, let's say in a course of 1 or 2 days. These are three questions which I think the trader should now really focus on.
And the bigger question is, should you buy the fall already or not, I guess. The sum and substance of all of it.
So let's look at this very interesting intraday, the 1 month chart. Any guess how much we've fallen in last 1 month? Including today's panic.
I think 4%.
3%? 3.5%? What's your guess?
Yeah, roughly around that, 3%. Oh, today's fall included, I don't know, 4%?
Okay, we're actually down 2%. Oh. We are only down 2% in last 1 month. So frankly, if you talk about it last 1 month, we saw a pre-election rally and then a election disappointment. What are markets reacting to today? Markets are reacting to an exit poll disappointment. If the current tally of 297, which is of NDA, and India, which is
227,
if it comes through, frankly, Prime Minister Modi comes back to power. It does not. Will a defense order get changed? No. Will a railway orders get changed? No. So if the current government comes back, if the current tally is to be true, which it appears that the India government is coming back into power, then today's market will be a reaction to the exit poll disappointment. It will not be a reaction to what markets were hoping. In the month of April, if anybody would have said that a 300 to 305 NDA, BJP plus NDA combination was coming, markets would have said, wow. In the month of March, it was 400. So expectations keep on changing as the narrative keeps on changing. Today, the narrative is based on what we saw yesterday. One. Second, if it reverses, which is that it is a non-India government coming to power, which looks like a slim majority and an outside chance as of now, but if that happens, then we are in for a bigger trouble. That means the scenario 2 comes in, that means the panic is not over. Third is, are we in for a V-shaped rally? That I think is ruled out now. Because the excesses in the market which got created because of market participation, behavior, euphoria, put an option, assumption, trading, I think that trend in the market, somebody's put a harp in the heart of the market momentum in some of the policy stocks. And once somebody hits you, you will take your time before you heal and you recover. That is how I see the market moving.
Yeah, it's bleeding, and clearly, like you said, we are undoing, Sanjiv sir, all the reaction from yesterday, the exuberance, the froth. And then eventually, once the rates settle down, once you know what the final seat count is, then the market will, go into phase 2 of reacting to that.
Correct, and Aisha, that is perfect greed and fear.
Yeah.
Till Friday you were fearful what the verdict is. The exit polls all came out with euphoria. There was a strong bout of short covering and you went ballistic. Now today the ballistic part has got very much corrected. And like Nikun said, I would expect you get stability, which means Modi ji comes and I am very sure we'll get 310, 320. That means the market will have made a strong bottom for the time being. Will it get into euphoria? No more.
No.
People will be choosy, they will wait for projection, they will wait for the budget, but maybe some of the sectors are overdone and you will see the outperformance of FMCG, insurance.
The underperformers.
Exactly. The large caps will place while and PSUs will take a strong breather, which was much needed after such a shock.
But Kunal, how do you tackle with today's pain? I mean, we are headed in for what, a 6% decline now on the Nifty, right? And I'm not even going to individual names. The pain is evident in the scripts. How do you tackle today?
Yeah, I think the best way to try and do is to trim your portfolios in the sense in which stocks which you have in terms of mid caps, PSUs, etc. Of course, you have to trim your portfolios over there. But then on the other hand, build large cap names. I think the defensive part of the trend, FMCG, pharma stocks. I think these stocks will probably cushion the market sell-off further. The timing, the question over here is the time to buy. I believe in terms of technical structure, the best time to buy is when the IVs sell off. Because till the time the IVs are at 24, 25, 28, 29, which means the markets have still not factored into the event out. The event would be out or the event volatility would be out once the IV starts to collapse.
And they haven't yet.
They haven't yet.
Okay.
And whatever the number is, whether it's 22,000 for the index or 22,500 or maybe 200 points lower, that would be the point where the markets would probably take a pivot from there.
I'll give you a classic example here. What has fallen more than the Nifty today is the bank Nifty. Within that, XBI is down 10%. Now ask yourself logically and say, okay, whatever the political mandate would be, I can argue about defense, I can argue about road, I can argue about infrastructure, I can argue about a lot of policy-dominated stocks. But what will change in life of in SBI?
Yeah.
The retail book is 55%. The corporate book is doing irrespective of what is happening. Their liability franchise is strong and they've gained market share. Why should that stock be down 10%? So there are a lot of these pockets where you will have to hunt. you will say, okay, what will be the reaction to this company irrespective of the government, and what will be the change if there is a change of government. I think that kind of opinion making now will start. But you should start doing that not today, maybe when markets settle. Let the markets stop falling. Let the markets know that what we are in for next 5 years, right? That will figure out by the end of the day. Once markets know in next 5 years what the mandate is, then you say, okay, whether collateral damage has been more and whether collateral damage is actually less. And that's the time you would say, okay, I'm going to go all in. I would say that would be a better strategy. I don't know if you guys agree with it.
No, I fully agree. Wait for the dust to settle, know what the program is, and you'll know by the end of the day. Like you said, there is no cause of reason for certain excesses, but those were already made excesses in the last few days.
Yeah.
Because yesterday was a blockbuster day as far as shorts getting squeezed, but it also meant there was a lot of froth which was created. I think it's a big correction of that froth. Underlying assets will again pull back, but once you have surety on what the next 5 years is, and Aisha, let me tell you, irrespective of who comes, the trend of India's growth is irreversible.
Exactly.
So we may see this volatility last another week, 10 days, and this to and fro, but by the end of the day, I feel a lot of the dust will be settled.
Yeah, I mean, if you're an India bull, eventually once the dust settles down, you'll be back to business and you will be back to buying those stocks. And whichever government comes into power, they have to focus on capex, they have to focus on defense, they have to, focus on India per se. So these stories will remain good stories.
Exactly, and that's what you were saying, that it's been 2 decades since you saw the real unraveling of value creation of PSUs.
Exactly.
It has just come to the fore.
Why would they give it away?
Why would anybody give it away?
The other point, Aisha, let's look at, and again, I'm not saying that what will happen at 4 o'clock. Right now, it is evident that the NDA is coming back to power, which is what is important. Let's remind ourselves 2 very famous examples. Circuit down in the market and circuit up in the market. 2003 circuit down, markets did not like the mandate, but markets didn't like the way the economic momentum was moving. So we saw the biggest bull market, which happened at a time when the government was supported by left. Similarly, 2009 circuit up. Market said, wow, policy continuity, circuit up. But then we moved into a multi-year pause. And then by the time 2014 from 2019 moved, the India had moved from top 5 to fragile 5. Right? You'd become, there were narrative which said that, BRICS, India got out. So it really depends on what work will happen now. So markets will act and react. Today, let's say if whatever we are assuming today, if it changes in 3 months, stocks will recover. And my point is very simple, that right now, if we close in the current number zone, which is 295 to 300 for NDA, it means continuity. That is something which is not going to hurt the market in a big way. Then it would be called as a disappointment to the exit poll. If the tally changes in a very drastic manner, and if the green becomes a bigger number, and then the change of government, that is something what markets are not prepared for, and that opens the downside, and that opens serious downside in the short term. So let's cross the bridge when we reach there.
Yeah.
As of now, we are not there.
Kunal, any trades? I can see the Nifty bank has fallen, 8%?
Yeah, I think it's 4,000.
Yeah.
No trades are such in this kind of a market.
Do nothing, right? Don't try and catch a falling knife.
Because it doesn't make sense to have your IVs are still at 28, 29, and that's the base which we look out for. When the event is out, when the IVs collapse, and the IVs have to collapse for us to make a sensible trade, whether it's on the short side, because if it's on the short side, you are looking at a prolonged downtick for the index. Prolonged in the sense maybe a 5% correction further for the next 1 month. And even if it's a bounce, then I think the IVs for that has to stabilize.
Let's see, all I can say is that nobody wants uncertainty. You want continuity. That's what life is all about. Not trying to predict the uncertainty, but trying to, embrace certainty. So by the end of the day, we just vote for certainty rather than uncertainty, because financial markets have now become core to India's wealth creation. And it would be painful to see that if markets go down for whatever reason, and then you see a destruction of wealth. And I'm really keeping my fingers crossed that the numbers where we are right now, that slightly better becomes the reality.
We're down 1,500 points now on the Nifty. It's a 6.5% crash. Let's use the word crash now.
Now it's crash.
It's crash.
It's more than a crack.
Yeah. But anyway, you never know. Yeah, you were making closing points.
So see, opportunity and fear go hand in hand. If you waited too long, then you may not get it, because just like the fall, by the end of the day, in another 1 hour, if you cross that 310, I would expect very strong short covering.
Also,
so
yeah.
see where you want to put your money. These opportunities don't come knocking every day.
So give us 3 names that you recommend
like I
buying
said,
right now.
I would say, ONGC and Coal India, clearness in anything of execution. There will be no hurdles. These are, the multipliers of the year. I would say HDFC Life, which I am very, very sure is going to be one of the outperformers. And I would say Wipro and an ABFRL, which I think are going to be relatively well, ensconced against the government and so on. So do your picks and chooses, but don't miss the opportunity also for the next few days. The volatility and the fear is giving you an opportunity.
Yeah, and the market has now broadened so much. The depth is so much that the market will be very, very quick in reactions, very swift. Kunal, you also like ABFRL, right?
Yeah, ABFRL.
So can we buy the fall in ABFRL right now?
Time to time
Yeah.
buy, chip into this name. Even the large cap names, I think L&T is down some 8-9%.
Yes.
That's also another attractive name. HDFC Bank has come back to a 1500 mark. That's also very attractive.